In company news, mining giant BHP has delivered solid full-year results with revenue of just over $51 billion right in line with forecasts. Now, earnings slightly beat expectations, and shareholders will welcome a final dividend of 60 cents per share ahead of the expected 51 cents. Additionally, BHP has also trimmed its capital spending outlook by $1 billion a year through to 2030, reflecting a more cautious investment approach as inflation cools. Analyst Zimelo Mbanjwa unpacks more on BHP's performance.
So BHP released interim results for the period ended 30th of June 2025. Now, immediately what you will notice is the financial metrics came in largely behind analyst expectations for the period. However, the share price was not down. In fact, the share price crept up on the day. And I think that's mostly because the underlying performance of key commodities was actually very robust. We saw record production for copper and iron ore. However, the iron ore pricing came against the trend, as well as the coal pricing also came against the trend. That's why we saw revenue declining some 8%, while EBITDA declined 10%, and underlying earnings per share declining 26% to around 206 cents. However, as I said, the core assets or the core commodities perform particularly well, especially copper, which saw its EBITDA growing by 44%. And in fact, copper now contributes to around 45% of the group's EBITDA. Now, while what this tells us is that the group is very well positioned to benefit from future-facing trends, with its strategy now more focused on these core commodities that are more future-facing. In fact, the group said about 70% of capital expenditure in the near term will be focused on copper and core potash. So the group's outlook from a long-term perspective is very robust, and I think this is what encouraged the market, and that's why we saw the share price move up on the day.